sell in May and go away is one of the famous Wall Street saying. And we did. We sold something and we did go away. But not really. In today's video, we'll look at how the portfolio looks like and which companies has been boosting its value. We're also going to look at the newest member of the family or the newest company in the portfolio. And we did some rebalancing and it's about $12,000. If you're new here, my name is Ron and welcome to Pinoy Stock Investor. And before we start, let me know down in the comments, how did your portfolio perform this month or this month of May? I'll make sure to read this comment in the next video. Okay, so to start, let's look at what's happening in the market right now. The past month, we are currently up by 5.04%. And looking at the market, we have here NASDAQ, DJI or Dow Jones Industrial, and the S&P 500. The NASDAQ is currently up by 9.32%, and the Dow Jones is currently up by 4.44%, and the S&P 500 is currently up by 6.22%. Compared to our 5.04%, we are actually trailing the S&P 500 and the NASDAQ composite. Okay, one of the best thing that happened this May is we reached our $200,000 goal for both portfolio, for the taxable portfolio and on the IRA combined. And we did move our goal to $210,000 for the year. But guess what? The market pushed our portfolio to reach up to $209,000 currently combined between the taxable and the IRA. So right now our taxable portfolio is at $138,511, which is up by 5.04% for the month of May compared to the S&P 500, which is currently up by 6.22%. We are lagging the S&P 500 currently. Okay, and in this portfolio, we did a couple of moves, significant moves actually, a total of $12,000 moves in the portfolio. We did exited a position and we did rebalance one of the holdings that we have in the portfolio. And we'll talk about it in a bit. Right now, let's start with the breakdown of the portfolio. Looking at our holdings, starting from the least or starting from the lowest holdings that we have here Uber, which is 5% or 5.54% of the portfolio. Currently, we have a total of 108 shares of Uber, or 108.908 shares of Uber, almost 109 shares of Uber. We are currently down in Uber by 10.86%. That is $933 in total. It is a really, we bought Uber at a really high price point. When we decided to invest in Uber, we bought it on a really high price point. I believe it was $80, and then we pulled it down to the cost basis right now that we have, which is $78.97. And we did recently increase the position to $108. And yeah, right now the total value of Uber is $7,667, which is at least 5.54% of the portfolio, and we are currently down by $933. Next is Meta. Currently, we own a total of 12.28 shares of Meta with a total value of $7,769. We are currently down by $14 in Meta. Yes, $14 from, I think I was down last month by $300 and now it's just $14. In the past 5 days, Meta has surged from $600 up to $632, pushing the portfolio value to 5.61% of the portfolio. We currently have a cost basis of $633.65 in Meta. which is at least $1 away from the current price right now. We did increase our holdings in Meta recently. It's part of the rebalancing that we did this month. Next is the company that have seen a lot of movement recently in the portfolio. We sold 14 shares of this company with a total value of $6,873. So we rebalanced 14 shares with a total value of $6,873, and it pulled back the position to a 10% of the portfolio. And this company is Berkshire Hathaway. We currently have 30 shares of Berkshire Hathaway with a total value of $14,234. That's about 10.28% of the portfolio, and it's currently up by $2,545 or 21.78%. Yes, it's still up by 21.78%. Our cost basis in Berkshire Hathaway is $389.62. One of the purpose of Berkshire Hathaway in my portfolio is to hold my cash, as I don't see anything of a good buy yet in the market. But when I see something, or when part of my wish list reach that point where I want to buy it, or that price point that I want to build the position, I did know that I will take some gains from Berkshire Hathaway and get those gains and put it on that company. That is the purpose of Berkshire Hathaway in my portfolio. Right now, I was able to get or rebalance the gains that I have from this company, from Berkshire Hathaway, to the new company that we're going to talk about in a bit. Okay, let's move on to the next company. Next is Amazon. On our portfolio, Amazon is our fourth holdings, which is at 14.29% of the portfolio. Our cost basis in Amazon is $197.32, and we have a total of 73.11 shares, or 12 shares, 73.12 shares of Amazon with a total value of $19,788. We are currently up by 37.16%, which is $5,361 of value. Yep, Amazon is actually really doing great right now, and I've actually increased my position in Amazon recently too, because I want to build this position. I also want to increase it, and at least to build this Amazon position up to around 20% or at least 18% of the portfolio. Okay, the next company that we're going to talk about is Microsoft, which is about 16.85% of the portfolio. Microsoft, we are currently holding 51.82 shares of Microsoft. We were able to build 51.82 shares. We did bought a lot of Microsoft recently when the price went down, and I tried to increase my position as aggressive as possible. Okay, we currently own 51.82 shares of Microsoft with a total value of $23,333. Say that again, 5 times. $23,333. We are currently up by 36.72%, which is $6,267 in Microsoft. Our cost basis is $329.30 since we started holding it, and right now it's at $450. Okay, next is Google. Yes, Google has been knocked back down to second position, or to number 2 position in the portfolio. We currently own 70.69 shares of Google with a total value of $26,889. That is about 19.41% of the portfolio. And right now, Google is up by 123%. It already doubled my money with additional 20% in growth. That 123.10% is $14,836 of gain. Our total cost basis was $12,052. So it doubled already, plus 23% more. And then that puts Google to 19.41% of the portfolio. Our cost basis was $170. Now Google is at $380 per share. Nice. And am I increasing my position in Google? Recently, I actually have a target price. If Google goes down a little bit more, I'm probably gonna buy it. But right now, Google is just really, I wouldn't say expensive, but it increased to the point that it is not on my buy list right now. Okay, then now the top stock, or the number one spot in the portfolio, is Apple. Apple has seen a boost recently. If we look at Apple right now, in the past 5 days, Apple traded flat actually, but it did gradually increase from last $280 May 1st to up to today, which is $312 already, and it's about up by 15.51% in the past month. Okay, right now we own 90.81 shares of Apple, and we are currently up by 95.23% in Apple. We're really close on actually doubling the money, doubling the investment that we put in Apple. A total value is $28.340, which is 90.81 shares of Apple with a total gain of $13,823. Our cost basis is $159.84. The total cost basis is $14,516, which almost doubled already, from $14,000 to $28,000. That is our number one, or that is the number one stock in the portfolio. It's about 20.46% of the portfolio, and that is about 93% of the whole portfolio. We just talked about 93% of the whole portfolio. Now, before we move on to the next company that we're going to talk about, to the newest holding in the portfolio, what company did we sell? That is MasterCard. We exited the position in MasterCard and liquidated that asset with a loss of around $500. We realized that loss, and highly likely that we are going to write off that loss against the gains that we realized in Berkshire Hathaway. So that loss will probably be, we would do a tax loss harvesting on that one, and putting all that cost, or all that liquidity that we were able to free up, we invested a total of $12,919 back into the portfolio, and part of it, or $10,000, went to the newest holding, which is Netflix. We've had Netflix before in the portfolio, and then we sold out at a loss back then. After that, I had to reorganize myself and put my resources into my high conviction holdings, which is the companies that I have right now. And I've since put Netflix into my watch list, because after I sold it, it had a run up and the price went really high that I cannot afford to go into the company on that price point. But right now, or when we bought it, Netflix is at a price point that I am currently excited to buy to start a position. Let's look at our Netflix holding. We do have 121.93 shares of Netflix at a price point of $87.47. That's total value of $10,488. Looking at it, we've been holding Netflix for 2 days now, and we are currently down by $176. yes, that's okay. We're still building our position in Netflix. I'm still buying more Netflix actually. It's a really good chance for me to pull down the cost basis for this company that I just bought. And I'm really excited how this holding will build into my portfolio, or how this holding will perform on my portfolio. And I'm really looking forward to how Netflix perform as a company. Netflix has been in my watch list for a long time now, but I never really had a chance to buy Netflix until now because they were more expensive, and they I consider them, on my point of view, that their price is currently not on my buying range. But since they went down up to their $87 level, or sub 100 level, I actually had a chance to take a look at it more. And looking at Netflix's historical PE ratio, it has been playing between 30 to 50 PE ratio. Now, last, or when I bought Netflix in at $87, their PE ratio is at 27 or below 30, which is like it has been below 30 back in 2022. So this is one of the best time that I've seen it, that it's when their PE ratio went down to below 30. Looking at their operating margin, if you look at the graph of their operating margin, it's just going up. It's the trend is just straight going up. Back in 2023, March 2023, if you look at their operating income, it is at 5.38 billion, and now you would see that it climbed up to 13.94 billion, putting their operating margin to 29.72%. You also want to look at their return on equity. And right now, if you look at their return on equity in the past 3 years, the lowest one back in June 2023 is 19.76%. And from that, it's just increasing up to 49.24%, which is the current level right now. Same thing with, if you look at their operating income. Their operating income has been increasing consistently year over year. And right now they have 18.23% quarterly growth. That's just some of the fundamental details that I'm looking at. Granted that historical data doesn't guarantee future result, but if you would look at Netflix's performance, it has been dominating on their own lane. Right now, Netflix is one, if not the best streaming platform in the US and probably in the world. And the competition, I would say that there's a lot of competition, but people, or the data shows that Netflix is the number one pick when it comes to streaming. And that builds the business's moat to compete in every level and to be number one in every level. We can talk about more in-depth discussion of Netflix in another video. But right now, Netflix is the newest addition to my portfolio and is a 7.57 position in my portfolio, which is $10,488 in value. Okay, here's the breakdown of the companies that are on my IRAs. For my Roth IRA, I currently have a total value of $30,643. And it is all invested in one ETF, which is VOO. I own 44.06 shares of VOO in my Roth IRA with a total value of $30,634. And I'm currently up by $12,489, which is 68.80%. Now, the second IRA is a rollover IRA, which has a total value of $40,316. And it's also invested all in one ETF, which is VOO, with a total quantity or the total shares of 57.96 shares and a total gain of $9,803, which is 32.13% of the portfolio or of the holdings. Now, combining them together, it is $70,960. Now, adding that to my taxable account, we have a total of $209,471, which is $600 away from my adjusted goal, which is $210,000. And will I be able to reach that next month? We'll see. But what I'm for sure is going to consistently add to my investment and buy or consistently build the companies in my taxable account and consistently invest in these companies. Okay, so Zealand007 from the comment section asked, what am I buying or what are the new things that I'm buying right now? So in this video, we showed the newest buy in my portfolio, which is Netflix, but I've been increasing my position in Microsoft, Uber, and Meta and consistently adding them, but we don't really have enough capital. I don't really have enough capital to show a significant add to it, but I'm consistently adding $100 here, $50 here, $30 there. So yes, and I'm also looking at the semiconductor stocks and companies, and I've been trying to learn more about them. Hopefully, when I'm able to see or when I'm able to decide if I'm going to buy something or not, their run-up is still there. Hopefully, cross fingers. Also, Redstone P7607, I hope I didn't butcher your name. You asked, how did I had a return of $100,000 in a few months? Actually, it's not in a few months. It's been a journey for me. I've been holding high quality companies and I put high conviction in them for a long time, like Google, Apple, Microsoft, and Amazon and Berkshire Hathaway. Actually, on my portfolio, I've been holding them for years, and that conviction and that research, that investment actually did give me the return that I have right now. I'm also buying and building a position in Uber, Meta, and Netflix, which I think, in my opinion, is undervalued, like how I thought that Google back then is undervalued, and I was just keeping on building my position in that company. I'm also building my position in these new companies that I've been buying, and I know that their future earnings will definitely pull their stock price up. Let me know down in the comments, what do you think of the portfolio, or what do you think of the companies in the portfolio? And do you think I'm gonna reach 250 this year? Let me know down in the comments. If you get value in this video, don't forget to subscribe and like this video. It's free and it will definitely help my channel. Hope you guys like this video. Have a great day and peace.